Let's bring in Scott Bauer, the CEO of Prosper Trading Academy. He's joining us to talk commodities. Scott, happy Monday. Thanks for sharing part of yours with us. Let's begin with energies and how they seem to be kind of tied to rates as of recent. We've seen, well, off the August lows, both start to inch a bit higher. Rates maybe not as much so on a tick-for-tick basis, but certainly higher prices at the pump and WTI energy prices, crude prices have sparked some, inflationary concerns.
Absolutely, and it's unfortunately a kind of a perfect storm for all of us consumers here. And then over the weekend you've got the OPEC people from OPEC saying we're not going to increase anything out there. You've got the minister from UAE saying these prices could be 2 or 3 times what they are right now. So at least right now it certainly seems coming out of the Middle East. They don't want to be accommodated to worldwide prices and what's happening to all of us, at the pump and everywhere. So it's a pretty tough situation right now.
They sure don't. I'm glad you reminded us in terms of OPEC and how they are kind of just turning a mute ear to some of the requests from the president and the Biden administration. Now, I like, again, a good reminder in terms of how prices could be a lot higher. Oftentimes, we forget, how lucky we are, and we should be happy with things the way they are, because if we were to see some geopolitical tensions or some sort of unrest, Scott, in theory, we could see a spike up at through 100, 120 easily without issue. Correct me if I'm wrong. They're kind of on the edge here, it seems like, and that could ultimately tip the scales in one direction or the other.
It's interesting that you bring that up, Ben, because if you look at, what has made the price of oil spike over, the last 10 years? Anytime we've had a big spike, it has been pretty much due to geopolitical tensions, which, thank goodness, right now,
there aren't much.
Not on the forefront here. So you're absolutely right about that.
So, but something to keep an eye on in terms of if that were to become a factor. Scott, prices at the pump ultimately is what we talk about here and how that impacts our pocketbooks. We're certainly seeing that on the rise here in Chicago, well up and through the $4 level recently, and across the board. Ultimately it ties into the discussion, but still yet at this point, not really providing those headwinds, as we mentioned, to some of the movement we've been seeing in the indices. Investors have largely shrugged off some of these concerns and remain focused on the positive.
And there are a lot of positives out there, but the bottom line is at some point this may wind up catching up to the average consumer. We go to the pump here and, oh my God, I got to spend $70, $80. At some point that is going to catch up. But as you just mentioned, there are a lot of positives out there right now. We'll certainly get some reports this week, which can exacerbate that in terms of inflation, CPI and PPI. And, it's so critical right now, Ben, because going into the holiday season, going into a holiday season that we didn't have last year because of the pandemic, people actually out there now, foot traffic out in the stores, out in the malls. This is going to be so important, so critical over the next 4 to 6 weeks.
Big for retailers, big for, prices at the pump potentially as well. Here we're looking at RBOB and crude oil both together, and the move up we've seen very closely tied. I also just wanted to point to, the ES for the most part, again, continuing higher here, in this case in the candles, while crude's been a little bit more sideways and kind of consolidating, okay, whatever
like
the word
that
may be. But Scott, let's talk about, speaking of consolidation, a couple other products. I wanted to get your thoughts on gold. A little bit of a bid, but comfortable around the 1800 level still, not quite what the bulls have been looking for. I guess in many ways they should be happy considering how the dollars remain very firm, and it's been holding upper levels. Gold's fared possibly better than many would expect it to have.
Absolutely. And for about the last 4 or 5 months or so, that $1,800 mark that you just mentioned really has been the pivot point here. It has been that price level has almost been like a magnet for both corrections and rallies. But it kind of looks like some technical indicators, though, recently, Ben, may have shifted that towards the upside here. And there's a couple factors out there that, in my opinion, really, really favor, I'm not saying a big breakout in gold, but favor the upside here.
Talk to me. What are you saying?
The FOMC announcement, right?
Okay.
We know they're tapering, but that doesn't necessarily mean tightening in the near term here. So short-term interest rates, they're not likely to really rise probably until second, third, maybe even fourth quarter of 2022. So this accommodative monetary policy, even though we're getting the tapering, this accommodative policy, that is bullish for gold and bullish for other commodities as well. And then, obviously we'll see what happens with the CPI data, the inflationary pressures. But I really think, if I look at that 1800 pivot point, 1810 or so, and I had to say, okay, where's gold going to be 3-6 months from now? I think it's decidedly to the upside.
I like that. And, I do like, again, the kind of dovish take in many ways in terms of the Fed and their ability to sort of differentiate between the taper and rate hikes potentially to come. They are still very accommodative, as you mentioned, and they're also have to be very agile. Would you agree, Scott, in terms of some of the economic data we've been seeing globally? I mean, you see kind of these ebbs and flows. I wanted to point out the trade data that we saw out of China, another record trade number, imports, exports, depending on how deeply you read into this, maybe a little bit more mixed. But I mean, it just sort of speaks to what we've seen in Asia. Here's the numbers. Again, exports up 27% over the weekend. We saw these numbers topping estimates while imports came off a little bit. But look at that record trade balance number again at $84.54 billion. Scott, I mean, just even some of the other numbers that we saw in terms of numbers out of Japan. I mean, ultimately, it's been kind of a mixed recovery globally. Here in the U.S. as well, strong number on Friday, but it's taken us a little while to get there, I guess is the point.
No doubt about it. And the Fed, I really believe, for as much, bad PR as they may get, I really do think that they have been agile, that they have really telegraphed to the market what their plans were. I think they've done a pretty good job with that. And going forward here, yes, things can change on a dime here. I do think, as we just mentioned, the next 4 to 6 weeks are critical with inflation numbers, with the holidays, consumer sentiment going into the holidays, and we'll see what they take out of that. But again, I don't see short-term rates really, affecting the marketplace at least for another 6 to 9 months.
All right, Scott, I can't let you get out of here without getting your thoughts on Bitcoin as it inches its way back up to these all-time highs. It took them out recently up to 67,000, but kind of took a little bit of a pause after. What should we be looking for?
I think we're seeing a rally in the crypto space ahead of these inflationary numbers that we're getting this week. And people really looking for hot inflationary numbers, which is going to help, what we've seen in the trajectory of Bitcoin, of Ethereum. To me, it looks like Bitcoin is going to take out those all-time highs. We're probably going to hit 70 grand. Earlier this morning, I saw an analyst from Goldman Sachs come out and say he expects Ethereum to hit 8,000 by the end of the year. We're talking 6-7 weeks from now, and that is if inflation numbers are hot. So, crypto is very, very on the upside right now. But as we were just talking about, that can change on a dime also. If we get in some inflationary numbers here that are not as hot as expected, things are cooling down, which obviously is really good for the overall economy. That could really hit the crypto market here.
Yeah, if risk on turns to risk off, ultimately we'd probably see a reflection of, in terms of crypto, the indices, and some of the other products we've been discussing here. Scott, always a pleasure. Thanks for giving us part of your Monday morning and starting the week with us here on the TD Ameritrade Network. Scott Bauer joins us from Prosper Trading Academy.